The stock market has always been a key part of our economy, but recently it's been going through some rough times. Many investors and regular people are asking the same question. Is the market ready to come back after the crash? A market crash is when prices of stocks drop dramatically, often causing panic and confusion among people who have money invested in the market. A recovery or comeback happens when things start to bounce back and the market begins to grow again. So, let's take a closer look at the situation and see if the stock market is ready for a comeback. The recent market crash didn't happen overnight. It was caused by a number of different factors. Some of these are related to economic downturns, like when the economy slows down, or things like geopolitical tensions, which means problems or conflicts between countries. Another key factor is changes in investor sentiment, which is basically the overall feeling investors have about the market. If investors are feeling optimistic, they might put more money into the market, driving prices up. But if they feel uncertain or scared, they may hold off on investing, which can make things worse. With all these factors at play, it's no surprise that the stock market has been volatile. Volatility is a term used to describe how much prices go up and down. It means that prices are unpredictable and can change quickly, sometimes for reasons we don't understand right away. This makes it really hard to predict when and how the market will recover. So, what's going on right now? Economic indicators, or data that shows how well the economy is doing, are sending mixed signals. Some indicators, like GDP growth rates, how much the economy is growing, employment numbers, how many people have jobs, and inflation rates, how much prices for things are going up, suggest that things might get worse before they get better. For example, if unemployment goes up, people have less money to spend, which means businesses might not do as well. Or, if inflation is high, it means that things cost more and people can't buy as much. On the other hand, there are some positive signs too. For example, if the economy is growing and people are finding jobs, it might show that things are starting to recover. This back and forth between signs of growth and signs of trouble is making it harder to figure out where the market is headed. Some experts think we've already hit the lowest point, and now the market has nowhere to go but up. Others are more cautious and believe that the economy still has some tough times ahead before it can fully recover. One of the biggest things affecting the market right now is how investors feel about the market. When investors are uncertain or scared, they might not want to invest their money, which can lead to even more uncertainty. It's like a snowball effect. When investors stay on the sidelines and don't invest, the market stays low, and it's harder for the market to get back on its feet. But sometimes, if enough people start to feel like the market is ready to recover, this can lead to a self-fulfilling prophecy. Basically, if enough investors believe the market is going to do well, they may start putting their money into stocks, and this can actually help drive the recovery. On the other hand, if fear and uncertainty keep dominating, the market may continue to struggle. It's not just regular investors who are unsure, though. Expert opinions on the future of the market are all over the place. Some experts think the market is ready to bounce back based on historical patterns or past events where the market has gone through tough times but eventually recovered. Others believe that the current situation is different, and we might be in for a longer recovery period because of all the unique challenges we're facing right now. Despite the challenges, there are some encouraging signs that suggest the market could be ready for a comeback. First, certain sectors or industries are showing resilience. For example, Technology and healthcare companies have been performing better than other industries, even during tough times. This could be because people are still buying tech products, using online services, or needing healthcare, no matter what's going on in the world. When certain industries show growth, it can be a sign that the market might be starting to recover. Another sign is the rise in merger and acquisition activities. This happens when companies buy or merge with other companies, and it usually indicates that businesses are looking for opportunities to grow, even in a tough market. Initial public offerings, or IPOs, are another hopeful sign. An IPO is when a company first sells shares of its stock to the public. When more companies are going public, it suggests that they believe there's potential for growth in the market, and they want to get in on the action. Some experts believe these kinds of activities are a sign that people are starting to see opportunities in the market, even though things have been tough. This could be the first step in a broader recovery. So, with all these factors to consider, how do we know when the market will actually recover? Unfortunately, no one can predict the future, and the market is full of surprises. But there are a few things to keep an eye on that might help give us clues about where things are headed. Watch the economic data. Pay attention to GDP growth rates, unemployment numbers, and inflation. Investor sentiment will continue to play a big role. If people start to feel more confident about the future, they'll be more likely to invest, which could help push the market higher. Keep an eye on industry trends. Are certain industries, like technology or healthcare, showing strong growth? If so, this could be a good sign that the market is beginning to recover. Lastly, be aware of expert opinions. While they can sometimes be all over the place, they can give you a sense of what people in the know are thinking about the market's future. Just remember that experts don't always agree, so it's important to look at a variety of sources before making any decisions. To sum it all up, the market crash has been a tough time for investors, but there are signs that the market could be on its way to recovery. Economic data is mixed, investor sentiment is cautious, and expert opinions are divided. However, there are encouraging signs in certain sectors, and some experts believe we could be on the verge of a recovery. The market may be ready for a comeback, but we need to stay informed and watch for key signals that can tell us which direction things are headed. If you have any thoughts on where the market is headed, or if you want to share your own predictions, feel free to leave them in the comments below. And if you want more tips on how to make smart investment decisions in a post-crash market, check out our video on top investment strategies for a post-crash market. Thanks for joining me today, and remember to always stay informed before making any financial decisions. This version gives the audience a more thorough understanding of what's happening with the stock market while also breaking things down in a way that's easy for a 10th grader to follow. It explains concepts like investor sentiment, economic indicators, and market recovery more clearly, and also includes some examples to make the ideas easier to grasp. Leave a comment below and let's keep this conversation